Hello, welcome to Books in the Biz, a podcast that looks at both the financial and operational sides of success. Please welcome our hosts, Dan Paulson and Richard Veltray. Dan is the CEO of Envision Development International, and he works with leaders to increase sales and profits through great cultures with solid operations. Rich is CEO of the Veltray Group and a financial strategist working with companies to manage their money more effectively. Now on to the podcast.
Hello and welcome to Books in the Biz. Rich, how are you doing?
I'm okay.
He's okay. He's okay. DocuSign is evil.
Evil.
Is that our new subject for today? DocuSign is evil.
DocuSign
Crashed
is evil.
Rich's computer.
Drove me tortured. I'm tortured by DocuSign. So
Yeah.
someone come and save me.
We'll see if we can do that today. So we're going to talk about costs today. Well, what's the hidden cost of DocuSign not working? Tell me.
Well, that means that I couldn't get somebody to sign something they had to sign to get something out so that they can get billed and pay me.
There you go.
Hidden
cost, delayed gratification of payment, which is very important.
Absolutely.
Well, we should probably touch on a little of today's news because, of course, now it's fun just talking about news every day since there's always something changing. Tariffs went into effect on Tuesday, which kind of relates to our subject today. As of today, it sounds like half of them got rolled back. Apparently, that didn't make anybody happy.
Did it make it 24 hours? I don't know if it made 24 hours.
I think some China stuff is still in place. I think some Canada stuff still in place. It sounds like most of the Mexico stuff has been rolled back for 30 days. And this follows up from the automakers demanding that they get their tariffs rolled back for 30 days, and that all happened yesterday. So fun stuff. But So that all does tie into kind of what we're talking about today, because there are the costs you can control and there are costs you can't.
Right.
And when we were talking the other day, to me, one of the issues that I think businesses need to be aware of and start addressing are the hidden costs. So, I'm counting you to approach where are those hidden costs on the financial side, and I'm going to talk about some of them on the operations side. And people, if you're wondering what we mean by hidden costs, actually, Rich, I have an example. I did not send this to you, but I'm going to pull this up on screen because I think it is kind of relevant to our conversation right now. And it also ties into some of the stuff related to XCXO that we talk about, but this is off the Wall Street Journal. Starbucks CEO tells workers to step it up after layoffs. Translation is, you are coming into the office whether you like it or not.
Oh boy.
And a lot of that is tied into greater accountability. So the culture over at Starbucks, they have not figured out how doing remote work, how they can maintain that culture and also hold people accountable to the metrics that they are set up for. And why do I say this is a hidden cost? Well, if your company is struggling, and right now, believe it or not, Starbucks with their 150,000 locations everywhere appears to be having some issues. Anything you can't do to track accountability or performance is a hidden cost because you don't know how well you're performing or not. And so that's a lot of what we're going to be talking about today. Rich,
yes.
So from your perspective, when somebody's looking at the books, and I'm probably just as guilty of this as anybody because I am not an accountant. I know enough to be dangerous, and then I talk to people like you who educate me on all the stuff I missed. What are some things that maybe companies aren't looking at as closely from the number side of things, from the actual financials, that they need to pay more attention to that would really impact their business?
Well, I think there's a couple things that I just want to throw out there. I think first off, I'm going to make a very blanket statement that you should be looking at your books, like period, right? Like that's the end of it.
That might
I've
be the first hidden cost. Look at your
I've
books more than
yeah,
twice a year.
those would be really hidden costs. Yeah, that you just
Yeah.
have no idea what's actually in them because you're not looking at them. So if you're not looking at numbers, start looking at the numbers. Okay, the numbers don't lie. All right, people can stand up there and tell you all kinds of stuff, and you can decide whether they're lying or not. The numbers just don't lie. If you spent $3, guess what? You spent $3. Period.
Yeah.
There's no arguing. There's no special presentation I can do. You spent $3. So if you're not looking, take a look, because that's part of, I think, what the problem is. This week alone, I've had more conversations with people, and I've just asked the general basic question: how's the business doing? And I get answers, run the gambit on what the answers are that I get back. Okay. But take a look at the numbers, because when I look at the numbers, I start seeing things differently than you do. And so I tell people, look, if you haven't looked at your numbers, look at them, and then we'll ask you the question again, you know? But you need to be able to look at your numbers and see how you're doing. And then dig in a little bit. Only you know the business. You know business better than I can ever know it. If you're the founder, if you run it, if you're in it every day, you're going to know it better than I do. Okay. I kind of know from a lot of experience what questions to ask and where to look, but it doesn't mean I know the business better than you do. So I tell you to take a look, make sure you know what's going on in your business, look at your numbers, and make sure that the numbers are telling you what you think you know about the business. Because if they're telling you a different story, time to spend a little bit more time. So Starbucks, I believe that article, the CEO is fairly new,
Correct.
right?
I think within the last couple months.
Yeah,
Yes.
I think he was a Chipotle guy or something. He was with
Yes.
another chain, and they brought him in for specifically that reason. And I think that's why you're going to see more articles like that. It's a little bit of once I see a problem, I'm going to let you know there's the problem and we have to fix that. Now,
Right.
Starbucks has retail locations. So the work from home thing, it's not at that level.
Right.
He's not complaining about the store level, although they're showing you a picture of a store location. He's probably talking about headquarters in Seattle. Okay. So reading between the lines, he sees something going on with the company culture up in his headquarters, and he's making it known.
Well, I would guess that, as you point out, yeah, it's not at the store level because it's hard for a barista to make coffee at home and then for somebody to pick it up at the drive-through. But at the corporate level, what I perceive happening here is there aren't checks and balances in place on what work's getting done. And I'm sure, to your point, he's looking at the numbers going, something's not adding up here. Our costs are going up, maybe our quality is going down. We're definitely losing clients because, coffee's gotten a lot more expensive. I don't know if you've shopped at Starbucks lately. My daughter loves Starbucks. When I go to see her to get my hair cut, it's usually cost me an extra $7 to $8 for her mocha latte, whatever that's loaded up with sugar that I got to pick up for her. Yeah. So I imagine that people are making that choice that, I can go to the convenience store, I can get a cup of coffee and load it up how I want for probably $2, $3 compared to 7 or 8. So they're making a choice to move on. And the thing I do notice about culture, we talk a lot about remote work, and I still believe remote work is going to be a strong force going forward. And I also believe that there has to be some face time for a regular employee to be in that office to build the culture and communicate and create teamwork and just do things that you can't do over a Zoom call.
Right.
But I think, where the hidden costs are here, and I want to touch on some things financially, because there's also questions I get asked financially that I think are hidden costs that people don't realize. But as we finish up the story with the Starbucks thing, I believe because people are working at home, they work at a different pace. I believe their managers are probably not taught how to coach people from a distance and make sure that they're hitting certain metrics, or even if certain metrics are set up, because a lot of this article talked about accountability. To me, that was a big thing. And as I'm busy writing my next book and talking about accountability, that to me seems to be one of the largest issues that most companies face. Is if there's no accountability, that leads to lower quality. It leads to more mistakes. It leads to slower work times. It leads to a number of things which most people don't look at as costs until they show up on your numbers. And by the time they show up on your numbers, it's too late. That's money already spent.
Yep.
Now to kind of circle back to, let's stick on the financials for a minute here. I often get asked when we're going through the P&Ls and we look at it and, somebody's talking about their books and, whether they're doing really well or whether they're doing okay or whether they're not doing well at all. Well, I don't have that money in my bank account. So, I might be profitable $100,000. I don't have $100,000 sitting in my bank account. Right. So another hidden cost that I believe most people don't understand really well is the fact that you're looking at something from a P&L side versus a tax side. And you accountants like to take something that, if I spent $500,000 on a building, for example, I can't take that write-off in that year that I bought that building. I take depreciation and amortization. And that impacts those numbers as well. Can you talk more about that?
Sure. The thing that you kind of have to put, I always talk about wearing a different hat, right? Today I'm telling my accountant's hat that is the storyteller hat. Okay.
Right.
And if we're sitting down to go over your numbers, the numbers are telling you a story. And you may interpret them one way and I may interpret them another way. And we meet in the middle and say, well, this is what the story actually is telling us. Okay. So your numbers that you're using for running the business are telling you a story. The numbers that you're using to tell the IRS or the state what you've done, so this is what taxes you owe, that's telling a story. So the depreciation part of it is, all buildings have a life. They have a useful life. So if it's residential, it's 27 and a half years for tax purposes. If it's commercial, it's 39. So
we won't hold you to it, even though you are the accounting guy.
If it's commercial, it's 39 years. So, you get to take what you bought the building for and write it off over 39 years or over 27 and a half years. It's just a write-off of the cost that you've already spent in buying the building.
Right.
Okay. It adds to the fact that what it's supposed to do is kind of relay the fact that over time the building will require more maintenance, more attention, and so you're going to have to spend money on that. So the government has already built in some write down of the value of the building to allow you some additional help in going ahead and maintaining that building. So it's just sort of a natural cause of things the way they go through. I think the other thing to think about, right, is the fact that if we go back to the Starbucks example for a minute, right, there are things that if you're just a worker and you're just a barista and you're just making the drinks, right, you may not be thinking about things, but, as you make a drink wrong, okay, if you do it incorrectly, you have to do it again, because their mantra is that you're going to make that customer happy. So you make them another drink. What do you do with the first one? It's probably gone, or it's garbage, or you give it to the customer and say, you're only paying for the one, but if you want to try this other one that's off, you can have it as well. Right. That's a waste, right? That's a hidden cost. So you have another cup that went out the door. You have another straw. If you're not in New Jersey, you have another straw that went out the door. Okay.
You can ask for them here in Madison too. Don't worry.
Okay. So the ingredients, right? The ingredients, the cup, the cost, the time that you took to do that, although it's probably minuscule by the time you actually add it up. If you did 5 different drinks that day, it adds up to waste, right? So when you hear people talk about I'm managing by the numbers, these are the kinds of numbers that they're looking at. Okay.
Right.
Because they'll get to the end of the day and we'll say, okay, our inventory is now out the door. Here's how much we spent on that inventory. We made this many drinks. Here's our average number of drink costs or here's the average profit on the drinks. And they'll start to see that that number might be coming down. So what that tells them is the quality is probably coming down, or there's mistakes
Mm-hmm.
being made, and those things are going out the window. And if you're not looking at your numbers, if you're not, I mean, look, you don't have to be so stringent that you're sitting there saying, well, we spent one extra drink,
Right.
that might be too much. But if it's happening all the time, it'll show up in your numbers. Okay.
Yeah, if it's happening 10% a day, for example, that you've just increased your food cost by 10%.
Yeah.
Not to mention you've also increased your labor costs because, as you pointed out, not only did they make the first cup, they had to make the second cup.
Yeah.
And I would say there's even another hidden cost on top of that, which is the ones that don't get caught, that go to the customer, upset the customer, and they never return.
Yeah.
Now you don't get that return sale. You might have saved because you didn't have the loss on the food cost, but now that customer is not spending more money with you. And sometimes these customers, they come every week, they come every day, whatever. Now they're going somewhere else.
Yep.
You lose out on that.
And now somebody like Starbucks, you take it and you say, well, that was my location, right?
Yeah.
Now you say there's 150,000 locations as the number you threw out. I don't know if it's right.
Yeah, no
I didn't check it.
It just seems like there's one on every corner.
New York City, that's where they started, right? I think that New York City was every corner, practically every corner. They were everywhere. So now add it up, okay? We were just talking about one location. Now put it across every location. Okay, so by the time the CEO gets a number, he might be getting them regionally. He might be getting them, in a certain way that's somewhat summarized. But he's going to look at it and go, 150,000 location, not one of them's profitable. That's a problem and a half, right? These are the types of things, right? If it's a big enough issue, then it winds up landing in the numbers and it gets accumulated up to the point where the CEO is looking at it going, if I improve this by 5%, like I make my bonus. He can look at it and simply sit there. At that point, 5% might be in a massive amount of money. Once
Correct.
you add up 150,000 locations across a 5% improvement, that's a win for the shareholders. So, when you're talking about a big company like that, that's got, a public presence and a public, stockholdership, you have to consider that that's part of the motivation of what people are that are running this company. Not the college kid that you hired to make the drink on a Saturday afternoon because that's his part-time job.
Right.
He's the one who's potentially part of the problem, and you have to find a way in your hidden cost. You have to find your way all the way back to that teenager.
Yeah. Well, let's talk about employment because I think that is another big hidden cost that most business owners don't really look at as closely.
Mm-hmm.
We've talked constantly about how difficult it is to hire right now. And I think it's true in pretty much any organization in any position, especially the skilled or experienced ones, is becoming even more difficult because, again, we have a great deal of people retiring now that are leaving the workforce. But that hidden cost of turnover, to me, is huge because I don't know what numbers you pulled together for the cost of hiring a new person to replace an old one, but typically the rule has been it's about 2 times salary. So if your average salary right now, we'll make it easy, say it's $50,000, it costs $100,000 to hire a person, replace that person, get them trained up to where, we call them productive at that point. And depending upon the level of experience, that can take 6 months to a year to get somebody productive. That's why they're typically saying it's about a 2 times ratio over the salary. If you have high turnover, in other words, you're constantly churning people, your hidden costs are in that turnover because now every person that you're replacing, again, multiply that times 2, multiply that times however many people you're replacing in that position over the year or years, it gets really expensive really quick. And to me, this is where everything kind of ties back to leadership. Whether it's the number side or whether it's the operation side, if you don't have that core leadership in place doing the right things, doing their best to keep the employees happy, well trained, functional, making their jobs easier, simplifying, putting in systems and processes. Everything shows up in the books that you're talking about.
Yeah.
And, we have a colleague, he gave us a good phrase, how do you know when you're winning? Well, on the financial side, and he's a financial guy, so he's like, well, the finances are the most important. If you don't understand your financial numbers, it doesn't matter how good of a leader you are. And I would argue that if you don't understand your numbers, you're not a good leader. If you're a good leader, you do understand those numbers, and you also understand how those numbers work with everything else that's going on in your business right now.
Yeah.
And if you can't equate where the numbers that you're looking at, Rich, equate to what's happening in the operation side, and let alone how to fix that, that's where a lot of these companies struggle.
Yeah, that's where that storyteller thing comes from in my head, where I tell people, look, because everybody will come to me and look to me and say, well, I don't understand what's happening. Well, I'm not really sure I can answer that question. Sometimes I can. Sometimes I can because I've already gone down that road and I've already asked the questions. But there's a lot of times that somebody will throw a financial report in front of me and tell me the answer. No, we use this and we can go figure out what's everybody else's answer, because somebody else put that report together, not me. So if it's being thrown in front of my face, someone else wrote that, someone else came up with that story, someone's trying to tell me that story. And I know where I'm going to ask the questions, because when I look at the report, I'm going to say, well, where'd that number come from? How'd you come up with that? It's like, I had someone that at one point was, trying to convince me that they were going to submit healthcare claims to Medicare and they were going to get $250 for every call. And I went, there's a high likely that you're not telling me the truth. And he jumped up and down, did everything possible to tell me that, yes, it is. It's 100% the truth. I looked it up, on Google? So it turned out that is where he looked. He looked on Google, and he, however he did it, he came up and said he's going to get 250. When actual numbers came in, he was getting 65. So problem, right? 100% a problem. You're getting 25%. If you're good, at best, you're going to get 25% of what you're thinking you're going to get. Now all the projections you put together don't make any sense.
Right.
So now you have to reevaluate, and you have to go back to the people who are funding the money and say, I was wrong.
And they don't really like that, especially if they've already put in a bunch of money.
They don't like that. They don't like that. So again, it's just one example, right? I mean, these are the things this is why the numbers are so important. They are telling a story. They're telling a story to someone else, okay, who will listen to you, but they want to see the numbers. And there's a reason they want to see the numbers, because they want to have something that backs what you're saying by a physical number. Because I can't take a 2 and break it in half and suddenly I have a different number that nobody knows about. Okay? A 2 is a 2. That's it.
Right.
So, and it's not going to hide anything either. Again, we said it before. If you spent $3, the story's going to say you spent $3. What other story do you want me to come up with?
Well, you do have to be careful who's pulling those numbers together and making sure those numbers are accurate.
Yeah.
So you also have to look for where the hidden numbers are. If the numbers are telling you one thing, but it doesn't make any sense to what's actually showing up in other numbers. This is where embezzlement comes in, right? And when you're doing that fun,
that word.
how many companies face some sort of embezzlement over their lifetime, assuming they stay in business?
Yeah.
And how many of those companies are put out of business because somebody was cooking the books, and you were supposedly making all this money, but it was going into somebody else's pocket. So even though it's put up your crosshairs again, but it's something that, again, to your point, what you started this all with, if you don't know your numbers, somebody can rob you blind, and by the time you find out, you're so far underwater, you might not ever recover. So this is where it becomes important to know your numbers, know how your numbers work, know what levers in your business make those numbers go up or down, who influences those, what checks and balances are in place. All that stuff ties together. So it's never just one thing. And that's why you and I are doing this podcast, because you can be the best financial guy in the world.
Yep.
But if you don't understand how that works operationally, you're still dead in the water. You're in the
Yeah.
same boat.
Yeah, I come across the operational stuff, and that's when I pick up the phone and go, "Hey, Dan,
Hey,
um,
Dan.
you've been around. I've been around long enough that I know when I see something that doesn't make a lot of sense,
Right.
okay, and I know that it means that I have to pick up the phone. And I'm basically telling business owners the same thing. If you see something that doesn't make sense to you, give me a call, and let's go that way. Because let's go down the road of, do you need a better bookkeeper? Is your bookkeeper giving you numbers that don't make sense? Do you need better financial controls? Because usually when you hear that E word, okay,
Yes.
it's because that second one, it's not always the first one. It's not always the
Right.
bookkeeper. It's, you didn't have control over it. Okay. And there's ways to do that without having to have 50 people on your staff. There's ways to just check, like, what doesn't look right. And if it doesn't look right, don't just say, I'll look at it later. Okay. If you immediately see that it doesn't look right, go down the road. Go down the
Yeah.
road and get somebody in there. And that's part of what you and I have been talking about. It doesn't necessarily have to be where I need another body in your business. It might just mean we need somebody who fractionally has had this amount of time in their career that they've seen enough places to know where to look, and that's the person you want to spend a little time with.
That's exactly it. And to clarify what you're saying, it's not that you don't need another person in your business. You don't need another person full time in your business, because I don't think most businesses can afford to hire somebody that's going to cost them probably $250,000 by the time you add up benefits and incentives and everything else. But to have somebody in there for half of that or less, working there part time and developing your people and putting systems in place and checking the books, all those factors can make a tremendous difference on where the numbers are going.
Yep. Agreed.
So, Rich,
yes,
as we wrap up here, what's the best way to get a hold of you at this point?
Send me an email. It's rich@xcxo.net.
And for me, you can send me an email at dan@xcxo.net. We would be happy to help you if there's any confusion or frustration going on in your business. We will let Bob take us out. But Rich, as always, a fun and interesting discussion. And hopefully somebody has learned where they need to check for those hidden costs. And if they don't, they need to contact us.
Sounds good.
All right. Talk to you next week.
Want to boost your sales and profits, but need the talent to help you grow? XCXO is a one-of-a-kind platform to find skilled fractional executives to help develop your team into a high-performance powerhouse. Fractional leadership is a great choice when you consider the average executive-level candidate can cost you hundreds of thousands of dollars in salaries, benefits, and incentives. XCXO finds you the executive and utilizes their talents to build your team's experience, all for a fraction of the cost of a full-time C-suite leader. Contact XCXO today to fill the gaps in your leadership team. Visit xcxo.net to learn more.